You just got wrecked.
Oh! Somebody! Oh! He needs some milk!
What's going on, guys? It's K-Dub here with another episode of Crypto Zombie. So today is Friday. That's right, it's the weekend. We made it. Congratulations, finally. But having a look at what is going on, not too much, honestly. Bitcoin is up 0.5%. You can see some of the altcoins are doing all right. Ethereum up almost 2%, XRP 2.5%. But essentially, we have been going really just sideways, range-bound, ever since we had that dump. You can see over here, pretty much on September 30th, we came down to about $7,692. And on October 1st, we pumped to about $8,500. But that was pretty much the range. And since then, we've just been going sideways. So it has been quite boring. So there are a few things I want to talk about today. Number one being something very interesting that was brought to my attention, which is that when Bitcoin tends to go 2x above its low, it usually presents a good opportunity to buy and has a rally after that. So I want to talk about if we're sort of in that buy zone. And one other thing that a lot of people have been talking about is this Alessio Rastani video. I've seen some reaction videos to it as well, where he's basically saying the one chart that they don't want you to see. Very, very bearish. Okay, he was the one that was talking about a $3,000 Bitcoin. So I do want to give my 2 Satoshis on that, if you don't mind as well. And also, one other thing I want to compare is, once again, the gold chart to the Bitcoin chart, because gold has actually been doing somewhat all right recently, whereas Bitcoin has been falling. So a lot of people are saying, see, I told you Bitcoin is a terrible investment. They're all going to gold. Well, we're going to analyze that and have a look and see if that really is the case. And if that sounds good to you, well, you know what to do. Also, if you are not subscribed to the channel, well, we do this every single day, and you definitely don't want to miss out. And everybody knows that Monday is the Ledger Nano S giveaway. All you got to do is drop a comment on literally any video, and you are eligible. Now, I have one quick thing I just want to say. I know we usually jump right into the charts, but this has been bothering me, and I just wanted to mention it. So you can see Larry Cermak over here. He basically pointed out that Coinbase has just hiked their fees for retail and has become the most expensive exchange, tied with Bitstamp. You can see right here, according to the chart, Coinbase Pro is #1. So they basically put out this announcement the other day saying that they're going to increase fees for makers and takers, and essentially people are absolutely pissed off about this. You can see low volume traders feel the pinch. So essentially regular everyday average traders, you know, like you and me, not whales, we're the ones that are getting punished right here. You can see they've openly admitted this, and basically if you have 100,000 per month or less, you are going to be paying fees of 0.25%, but from Monday, the rates are going to increase. And yeah, they're saying that this is in response to their clients' needs. Here's this right here. So essentially, guys, what I'm trying to say is this is getting out of hand. This is absolutely ridiculous. And this is why the other day on the channel, we had Josh Rager. He is an advisor to Level, and I've signed up for Level. It's $9 a month. That's it. No trading fees, no hidden fees, nothing. Just $9. And you can see right here, they have a legit team, and they have investors and advisors like Willy Woo and Jimmy Song, who are very legit, very respected in the space. You can see on top of it, it's they have BitGo that they work with. It's FDIC insured, and it's FinCEN regulated. So this is definitely something, I'm looking into, guys, and I can't wait. I am on the waiting list because New York and a few other states, they have to, I guess, get some certain things together before you could trade. But you could even see on the slider right here, you know, for example, look at it, $9 a month versus Coinbase. So even if you were doing, let's say, $1,000 a month, even if you're only doing, I don't know, 10 trades a month, okay? You're still paying upwards of over $200 on Coinbase, 26 bucks on Coinbase Pro. So just wanted to point that out, guys. Like I said, it's not sponsored, nothing like that. I'm not trying to shill this, but if you do want to sign up, you need a referral link. You don't have to use mine, but if you want, you could do lvl.co/zombie, and the way that you'll know is that the screen will go from purple to pink, and it'll say you're invited, okay? But it is invite only, and you do need a referral link. But yeah, this Coinbase stuff is getting out of control. I mean, they already have hidden fees as is. So yeah, I just had to say that. Sorry, guys. I'm not going to do this every video. We're going to jump right into the charts next time. But this is something that's been bothering me, and I'm glad to see that someone out there is actually trying to tackle this head on and get rid of these ridiculous fees. So that being said, now let's actually look at what's going on in the markets. Now, interestingly enough, today, while Bitcoin is down in US dollar comparative, a lot of the altcoins are actually doing quite well today. In fact, if I switch it to the Bitcoin comparative, well, for the most part, a lot of them are in the green today. So that's the situation. Looking at centrality up again, only $201,000 worth of volume though. Very, very risky, guys. Aurora, Basic Attention, IOST, Factum, Engine, Waves, Stratus, 0x, Nexo, and Dragon coins again with quite low volume. But speaking of low volume, we have low volume essentially across the board. Bitcoin under $330 million. Looking at Coin Farm, it's practically neutral across the board. The longs are ahead, but by what? 50.2 to 49.7%. Very mixed day in the markets today. Now, having a look, we are still being held down by this 200 daily moving average. You can see every single time we try to break above it, we get stomped out. Now, this is not good. We know the more we attempt to break through something, it usually just weakens it, right? But usually weakens it on the support side, not so much on the resistance side. You can see right here. Now, remember yesterday I did sort of extend this out. See if I get rid of this right here. You can see basically. So if we extend the 200 daily out here, you'll notice that we are coming to a bit of a point right here around, well, we have one decision point October 6th and another October 9th. So I would be keeping our eyes on that. Keep in mind, it is very easy to move the prices on the weekend. But the one thing I do want to point out real quick is we do have the MACD now slowly treading upwards into the light red. Now, as you notice down here, it looks like we may be looking for a MACD cross. Now, if the MACD was to cross now, it would actually be a bullish cross because we put in a bearish cross right here on September 9th. In fact, just a few days later, we took that massive plummet. So the thing is, though, sometimes this can be a lagging indicator. As you can see back here, if you had waited for the MACD to cross in September 2nd, we would already have been mid-pump. So you kind of have to anticipate what it's going to do. And it does look like if these two cross, now keep in mind they could touch and not cross, but if they do, that would probably be very bullish for Bitcoin. And considering that we are in this channel right now, you would be looking at these next levels. The first obviously being the 200 daily around 8,500, and the next resistance would sort of be kind of around the $9,400 level, okay? So that's what I'm looking at. And if we do get to the top of the channel, the green channel right here, if we were to go straight up, that's about $10,400, but there is some major resistance looming overhead. Now, Dave the Wave, he says getting down to business, a possible short-term target. He is saying at previous support, then back down to the target in the more medium-term range of 6.7. So once again, this is saying we could have a bounce up, but then continue falling. So we could have like a fake out rally and then continue lower, right? So what are the chances of that happening? Well, I do want to point out that we are looking at a potential, once again, I hate saying the term death cross because it sounds like so terrible, but essentially a bearish cross of these two moving averages. You have the exponential 21 and the 200 daily, and that looks like it may be happening. It could even happen by the end of this week, beginning next Monday even. When we had the bullish cross, we had a pump. And, obviously, like, for example, having a bearish cross back here, not too good. So I am keeping my eyes on that moving forward. But let's talk about Alessio Rustani's video, the chart they don't want you to see. We're going down to $3,000. Well, in this video, he actually uses something referred to, which I don't really use too frequently, as line break, okay? Now, the first thing I want to say right off the bat is this is not a very common way of charting, right? People use regular candles, hollow candles, Heikin-Ishi. You don't really see line breaks. So many of us out there do tend to believe that, TA is a self-fulfilling prophecy. If we're all looking at the same chart, when we were all looking at the descending triangle and triangles have an 80% chance of falling to the downside, well, surprise, surprise, that's what we did. Who is actually looking at this chart? Nobody is my point. But let's say that there is somebody looking at this chart and it's a very intelligent whale and he's manipulating the markets. Well, essentially, Alessio says that, we had this crazy pump here. We came down to the 21. That's essentially the support that we had during the peak of 2017. We pumped up one more time, the fake out rally. And once we dipped below it, we essentially just went on this, massive bear trend for basically an entire year. Right? Well, having a look right here, he's saying, well, we're doing the same thing. We touched it, we came up, and we went lower. But, here's the thing. We have done this before. I mean, what about back here? What about back here when we came up and we touched it, we bounced up, and then we dipped, but then we instantly put in from bottom to top, okay? We did a, 153% increase. So what about that time when it happened? Now, he did make some good points that we did it at the top of the, 2013 bull market as well. But I just think if you look at this chart, you could see a lot of scenarios in which we dip below it and then have instant pull, bounce back. So I really don't know if this is necessarily the greatest chart to be looking at. I mean, obviously it gets views, right? The chart no one's looking at, but I mean, personally for me, I would be looking at really just like what's been happening recently. Having a look right here, both of these situations we put in a descending triangle, we fell to the downside. We had this resistance that came down here that eventually became the bottom. It looks like that's exactly what we're trying to do right now. And what we did from that point was we had a little bit of a fake out. We dumped even lower, which is where we hit the absolute bottom of around 3,200. And then we went sideways, right? It was an Adam and Eve bottom. We went sideways for, I don't actually know how long it was from the time we hit the bottom off the top of my head. Let's see. It was about 107 days, okay? And then we rallied, and then we had a massive rally all the way up to the top. Well, currently you could see if we zoom in right here, just kind of, saying, will history repeat itself? Well, look, we had the pump, we had the fake out, the dump, which would bring us back down to about if we're looking at this chart, that's kind of around $7,400, goes sideways, and then once we hit the resistance again, where we're initially dumped, which, would be sometime, could be even by December of the end of this year, then we would have the massive pump, but it could happen even sooner. I just wanted to point that out. Now, a lot of people are still talking about the futures gaps, right? Because we were questioning when we were way up here if we were ever going to close this sort of $8,500 gap that we had right here. Well, nevertheless, we closed it. So that sort of answers the question whether or not gaps get filled on the daily, but I'm looking at the 4-hour. We do have another gap down here that in order to close it, we would have to go down to about $7,200. Now, keep in mind that this is on the 4-hour. If we zoom out and we switch this to the daily, the gap got closed. Okay, so I just want to point that out. We may not close the gap, but for those of you that think we do, we are looking at a $7,200, retracement. But keep in mind, we could just wick down there and stay down there for not even just a few hours and still close above it, right? But if we would want to close the gap on the 4-hour, then I guess we should at least stay down there for 4 hours, right? That is the situation. But also, if you do believe gaps get filled, don't forget, we do have one up at $11,000 that also needs to get filled as well. So we could go negative, but we can also go positive. Now, also talking about what Vinny Lingham said, mentioning that it seems that once Bitcoin goes 2x from its lows, this typically marks a conservative opportunity to buy. So you could basically see down here, we had a $2 Bitcoin pumped up, came down back down to $4, went sideways, pumped. Then over here, we had a $120 Bitcoin, fell down to about $65, went sideways and pumped. Once again, we had a $327, I think I'm looking at that right, Bitcoin, came low to about 163, went sideways, and then had that pump. And currently, we're looking around that $3,200 level. So is $6,400 the level that we're looking at? Well, looking basically at our monthly EMA ribbon that we have been talking about for quite some time, the exact measurement up here is $6,931. So like I said, there's a chance we could go down to these levels, but I wouldn't anticipate staying there very long, and I don't personally think we're heading back into a bear market. I just think there's been way too much excitement, way too much movement, and if you guys didn't check out my video from yesterday, I pretty much proved to you that there's massive OTC demand, not only from certain regions, but also from institutions as well. And if you guys didn't have an opportunity to check out that video, definitely check it out. I will drop it above for you guys as well. But I do want to talk about gold, okay? So some people saying, well, gold's been performing so well and not, Bitcoin's just been slacking, so obviously it's a fluke. Everybody needs to go run and invest in gold. Well, I want to point out something interesting. How do you know that maybe Bitcoin is not leading the markets? Because it kind of looks like what gold is doing is actually kind of copying Bitcoin on the short term. And let me show you what I mean, okay? And now, of course, these are just fractals. Fractals don't always play out, but I just wanted to point out right here. So basically, this green line represents when Bitcoin started pumping on April 1st, and this red line right here represents when Bitcoin hit its all-time high. Well, you do notice that it took gold a while. Gold didn't really start rallying until May 30th, okay? So Bitcoin had already been rallying for 2 months before gold even started its rally, right? And then you do notice that once Bitcoin did hit its high, gold started to actually struggle as well. But whereas Bitcoin actually dumped, gold continued to pump. But you'll notice I do have this blue box highlighted right here. And what I essentially want to show you is if we look at the Bitcoin chart, and I just want you to see this, Bitcoin had its pump. it did its sideways consolidation, it had its pump again, and then it had a little bit more of a crazy up and down sort of consolidation before having its massive blast off. So you got to ask yourself, you know, who's following who here? Is gold following Bitcoin or is Bitcoin following gold? I would say gold is following Bitcoin. And the other thing that I want to point out as well, even though, you know, everybody out there that's a gold bug is super pumped about the price right now, well, gold is currently up 17.84%. Whereas if we have a look at Bitcoin, not even counting what we did at the high, just from when we had the massive breakout, we're still up 97%, not to mention we were up 234% at the high. So just want to point that out, and that is from the pump on the first. That doesn't even count the bottom. So that's my situation. That's the situation that I'm looking at essentially. But I do want to once again bring up Bitcoin returns by month. Now, October has actually been a very good month for Bitcoin returns in the past. In fact, if you look down at the average, it's one of the better performing months overall. However, when it is basically when it follows 2 bad months of August and September, well, then it does tend to not be a great month. However, the losses are minimal. So October essentially has, as you can see right here, you know, the worst month October ever had was 36%. And that was in 2011. But the other months, for example, 216% pump in 2010, negative 12% 2012, 54% in 2013, negative 11 2014, positive 37 2015, positive 16 2016, positive 47 in 2017, and obviously last month's bear market was pretty rough, negative 4%. So we could be looking for another negative month, but I do know what you guys are saying. There's no interest from Backed. 8 Bitcoin. Come on, guys. I think that everybody's already in it, to be honest with you. But that's the situation. Let me know what you guys think. Do you think that we need to go to hit some of those lower lows? Do you think we need to go down to that sort of 2x level around the 6,400? Are we going to the 3K level like Alessio Rastani says, which I literally just don't think that's going to happen. You guys can take a screenshot, record this video. I just don't think we're going down to 3K. I think that's just insane. But that is my opinion. Moving on, talking about some news though. Hey, Coinbase actually had some good news that came out. They've reinstated the GBP transfers for its United Kingdom customers, so there you go. They also added support for basic attention tokens, 0x, Augur, Stellar, and XRP to the GBP wallets. However, like I said, if they have these fees that they're adding to Pro, who's to say that they're not going to eventually just add them, to Coinbase as well. So guys, like I said, definitely check out Level. You can sign up using my link below, or you could just add /zombie at the end, but you don't have to, guys. But like I said, once they do get this rolling in my state, which should be soon, then I'm definitely going to switch to that 100%. But also, talking about a few other things, and then let's get on out of here. Actually, you know what? Let's just end here. Essentially, PayPal is looking to withdraw from Facebook's cryptocurrency project Libra. Now, this is according to, once again, this is like one of those like anonymous type sources, but PayPal was reportedly the only member that did not attend the meeting. People familiar with the event told them that the online payment giant is concerned that Facebook hasn't done enough to address regulators' concerns, specifically those related to money laundering. In fact, I saw the CEO of Apple, Tim Cook, he actually came out and wasn't really a fan of some of this stuff as well. They say payment companies don't want their regulatory scrutiny to bleed into their business, so they say that PayPal, nevertheless, they might rejoin at a later date. Notably, Facebook's Libra's project is being led by former PayPal executive David Marcus, and, he has argued that Libra doesn't threaten the monetary sovereignty of nations, but they seem to be a little bit disagreeing at that moment. So they say Libra's association founding members, including Visa, MasterCard, and Booking Holdings, were considering quitting under government pressure. So things are definitely looking a little bit rough for that moving forward, but that is it, guys. We do have our eyes on this chart. We do know that we're looking for a massive move. I have gone over many of those key levels. If you guys are trading using leverage, obviously be safe out there. If you guys are interested, I do have a tutorial on this. I will drop above, and I do have a link below. But, that being said, obviously, I would be safe out there. These are definitely rough times to be trading. And yeah, we spoke about the levels. You can check out my video with Josh Rager. We're sort of still looking around that 8-point-K level for a breakout, and then obviously I spoke about the rest. If you do think we're going to go lower, well, then just rewatch the video. I basically went over all those levels. So that is it for me today, guys. Thank you so much for coming back to the channel. I tried to keep it nice and short and sweet for you today. I really appreciate it. Obviously, you guys are freaking awesome. You're the reason that I do this every single day, Friday, Saturday, Sunday, Monday, holiday. You know I'm here. I'm not going anywhere. I'm here. I'm like the Titanic, man. I'm like the captain, man. I'm either going down with a ship or I hope I don't go down with the ship. Well, let's just say we're going to the moon, okay? That was probably a bad analogy. That was a bad analogy. But anyway, what I'm trying to say is I'm not going anywhere, and I hope you don't go anywhere either, because for those of you that have been dollar cost averaging, I do know that this month has been a little rough. In fact, the past 3 months have been a little bit rough, but this is what Bitcoin does after having massive run-ups. And if you are new to crypto, well, and you're thinking about selling, I'm not going to give you financial advice, but just be careful, because every time that coin pumps to the next new all-time high or we surpass